When you think about the global diamond market, you probably picture it as one single thing. But right now, that's not the case at all. It's literally a tale of two markets. One is in a total crisis, with prices just tanking. And the other, it's absolutely booming. So let's get into it and break down this great diamond divide.
So what is going on here? Well, on one side of the coin, you've got the market for your common, smaller, round diamonds. The industry's bread and butter. And that market is in a really serious slump. I mean, prices are just plummeting. But then, on the flip side, you have these larger, more unique, what they call fancy shapes. And for those, prices are soaring. It's this incredible story of the common versus the unique.
All right, so first up, let's really dig into the struggling side of this equation. We're talking about the part of the market that honestly makes up the vast majority of diamonds sold. These are the stones that have been the industry's bread and butter for like decades.
And look, this slump isn't just something you're seeing at your local jewelry store. Nope, it's coming from the very, very top. I'm talking about De Beers, one of the biggest names in the game. They've actually been forced to make some really deep price cuts on their most common mid-range diamonds. And when a giant like De Beers has to do that, you know it's a massive, massive signal that demand is just drying up.
And you don't have to take my word for it. The hard data absolutely confirms this slide. If you look at the RapNet Diamond Index, in just the last year, prices for half-carat stones have fallen by a staggering 26%. 26%. Even the classic 1-carat diamond, a total staple of the industry, is down almost 9%. We're not talking about minor market corrections here, folks. This is a really significant downturn.
And this chart right here, it really shows you what that price drop looks like for 1-carat diamonds, and this is just over the last 3 months. What's so striking is that it's not all over the place, it's not volatile, it is a steady, consistent, downward slide. The trend here is just unmistakable.
Okay, so now let's flip the script and shift over to the other side of this divide, because a completely different story is playing out over there. In this corner of the market, it's all about scarcity and unique tastes, and that's creating an absolute boom for sellers.
And we're not just talking about any diamond that isn't round. Oh no, the demand is incredibly specific. Buyers are literally chasing after these elongated, fancy shapes. So think of those elegant ovals, the sharp marquises, and those long cushions. It's these particular cuts that are in super high demand and, you guessed it, really short supply.
Get this. The shape alone adds incredible value. I mean, just as an example, a long cushion-cut diamond can sell for a 20 to 25% premium over a square one, even if they're the exact same weight and quality. That is a massive price difference, and it's driven purely by having those desirable proportions. Wild, right?
Yeah, and this quote from inside the industry really gets to the heart of this whole boom. It's not just about finding a fancy shape. It's about finding one that is exceptionally well cut. It's that perfect combination of a unique shape and just master craftsmanship that creates true rarity. And that's what's driving these prices sky high.
But, and this is a big but, there's a major catch. This boom is only for the A-listers, the best of the best. If a fancy shape has poor proportions, it's considered illiquid. And that's just industry speak for good luck trying to sell this thing. So while a perfect oval might be in a bidding war, a poorly cut one is pretty much just gathering dust on a shelf somewhere.
So this whole thing isn't just some little niche trend. No way. This great divide is actively reshaping major diamond hubs all across the globe. So how about we take a quick world tour and see how these dynamics are affecting the key regional markets?
First stop, the United States. And here, the split is crystal clear. You've got steady, really solid demand for those large, elongated, fancy shapes we keep talking about. But for your standard round diamonds under about 1.2 carats, yeah, the market is described as just plain weak.
Now, let's jump over to India, which is a critical center for cutting and trading. And over there, the softness in that smaller stone market is causing some real hesitation. Traders are being so cautious that they're basically refusing to buy any new inventory until they have a confirmed order already in hand. I mean, it makes sense, right? Nobody wants to get stuck holding a bunch of stones that are losing value by the day. Next up, Belgium. Another huge trading hub. And honestly, the report from there could be the tagline for this entire explainer. The market is literally described as split. Anything under 1 carat is soft, while stones 2 carats and bigger are holding steady. It's a perfect little microcosm of the entire global picture we're seeing.
And then if we look at Hong Kong, the picture is a little bit more mixed. The overall demand for diamonds is still pretty weak, but there is a glimmer of hope. Some of the major retailers are reporting that sales have at least stopped free-falling and are starting to stabilize. So, maybe a good sign?
All right, so we've heard the stories from traders all around the world. Now let's tie it all together and get back to the hard numbers. The data that truly defines the bottom line of this crazy divided market. In this chart, it just visualizes the divide perfectly. Look at this. The price for a half-carat diamond completely collapsed, down over 26% in just 1 year. Meanwhile, the price for a much, much larger 3-carat stone, it barely even budged, dipping just a little over 1%. I mean, the difference could not be more stark.
But this next statistic might be the most telling one of all. Okay, in India, the volume of polished diamonds they exported, so the actual number of stones, went up by 5%. They shipped more stones out, but the total value of all those exports went down by 10%. So what does that tell you? It means they're selling more diamonds, sure, but they're the cheaper, smaller stones that are literally dragging the total value of their business down.
So, after looking at all of this, we're left with a really fascinating question, aren't we? For decades, the diamond industry was built on one simple idea. Bigger is better. That's it. But everything we're seeing now suggests a pretty fundamental shift. So, in this new diamond world, is a stone's uniqueness, its specific shape, its character, is that actually becoming more valuable than its sheer size? That's definitely something to think about.